existence probably about a year ago. But besides that, we've been trading the stock market, futures market for well over 10 years with great success. And we're really find that having that concrete education is beneficial to actually succeeding in these markets rather than just gathering information from everywhere and not really knowing how to put it together. So hopefully on this webinar, you all will find those missing pieces on how to go about processing all the information we have in store and to make your trading journey a lot easier. All right, everyone, welcome. We'll get started now. We pieced it together so it would be nice and concise. That's the word I want to use. So not over long and boring, just really just putting together that information for you all. So welcome, everyone. I'm Latoya. Ernest is with me as well as Kevin. Many of you know Kevin. Kevin's been very, very helpful in providing a lot of information for new beginners and those that are interested in learning about the stock market. So it was great for us to actually put this presentation on because we host plenty of webinars on our end, as you may know, or for those that do not know, we are a stock market trading educational company. So we provide a lot of content, a lot of free webinars, just so people can just learn and just get started in general. So as I mentioned before, we've been trading, Ernest and I, for over 10 years in the markets. Lots of success. We trade futures as well. We trade Forex. One thing we have not gotten into is the cryptocurrency aspect of trading. But with any markets, key importance, if you know a chart, you can really trade anything. And really and truly, it's that simple. So let's just get started. I'm going to have to kick off the actual legal disclaimer because we are an LLC. So the publication is provided to you solely for informational or educational purposes. This publication is not offered as advice, whether professional, financial, or investment advice or otherwise. It should not be assumed that the methods and techniques taught by the Profit Room will be profitable and that they will not result in losses. Past results are not necessarily indicative of future results. So let's dive right into everything. So how would this actually function today? So I'll let everyone know how to get started. We're going to dive right into candlesticks, the core, the foundation, importance, then stock charts, how to actually read a stock chart. How do you know what the chart is telling you? And from there, what's very important is risk and money management. As we've seen numerous times before, many people will dive into the market and they do not understand risk and money management side of trading or investing. So we're really going to hammer in on that point. So here we go. So how to start trading or investing in the stock market. Now, we're in the information age, so it's easy, especially with YouTube, to just type in a question, how to trade the stock market, and you get various information, videos, all sorts of different sources that pops up. Start learning from there. Many choose to read books. There are very good books as well, or there are lots of educational companies that people seek mentorship from so they can really be guided. You get that one-on-one mentoring to learn, to basically filter out all the unnecessary information per se. From there, the broker. So we have a few brokers listed like E-Trade, you could start with, TD Ameritrade, or you could start with Fidelity. But the one that popped up within a few years is Robinhood. So, what's the benefits of Robinhood? This broker basically is non-commission based, so it's very good for newbies to get started with that. You can buy a share just to see how it functions. But I would say there are a few things that are on the negative side with that broker. For example, you cannot short a stock, and it's very important to know how to short a stock. Basically, shorting is that you're assuming that the price of a stock will go down, and Robinhood does not allow that. So it's really a starting broker. And then eventually you can get into E-Trade, TD Ameritrade, Fidelity. Just know Scottrade has been bought out by TD Ameritrade, and these are known as discounted brokers. Basically, flat base fee, $7, $10. The commission varies with per trade transactions. Now, besides these brokers, there are other brokers. Once you know how to trade and you want to get more advanced into day trading aspect, for example, there's other brokers. So once you get the education, your broker now is like, where do you find stocks? How do you find these stocks? Not in a Facebook room or anything like that. It is very important for you to do your own research, your own due diligence, because how many times have we seen something in a group that's a buy? Buy this stock, by the time you get in, all of a sudden it doesn't work in your favor, right? You get dumped on, the stock dumps on you, and you're like, what in the world? That's because you follow somebody's buy opinion and not necessarily doing the research on your own to back up that opinion. So a lot of times what happens, they're known as pumps and dumps, especially in the penny stock world. So it's very important to use tools and resources like Yahoo Finance, FinViz, bar charts, all of those to find stocks, research, and do your own due diligence. So once you learn how to search for stocks, there are different criterias. You have to establish a trading method. Now, many people try to day trade without really knowing how to. So we always advise for newbies getting started, the swing trading method is the best method. It allows you more time to sit and allow that stock to work in your favor based on your analysis. So that's one thing. With day trading is a little bit different because the concept of day trading, you want to make that money today, not tomorrow. What I find is that a lot of people, they will get into day trading, but they will get stuck in a stock and hold it till the next day and the next day. They're doing the hoping game, hoping now that it goes in their favor when it was only meant to be a day trade. So day trading, you have to close that position that very same day, before the 4 p.m. Eastern time bell rings and the market close. So establish between day trading and swing trading. And then what's next? Risk money management, as in a trading plan. So a trading plan is your guideline. When will you enter? Where's your stop? And most important, what's your target? So when you have a plan and these guidelines, you more than likely will have a successful outcome. Now, 99% of this time, you do not have a trading plan, most likely you will fail. So we'll move on to the next. Technicals versus fundamental analysis. So this is all about, once you establish a stock, which method are you going to use to base your buy on? Now, swing trading and day trading, more than likely you will like to use technical analysis, which focuses solely on charts and past price behaviors. Oftentimes, some may use indicators such as moving averages, such as Bollinger Bands, MACD, RSI. Just know that no matter what indicator you may use, that indicators are always laggers. They always lag price action. So, profit room, we usually like to use just naked charts. And what I mean by naked charts, simple candlesticks, support and resistance, that's it. Now, fundamental analysis, you get a lot of investment banks, large hedge funds. They may mix a little bit of fundamentals with technicals, because just remember, they're buying on a grand scale. So a lot more shares, more position sizing based on a macroeconomic perspective of the trend, as well as the stock analysis depending on what they're buying. So those are the difference between the two, and you have to really define what you may want to use in order to buy a stock. Now, there are different stocks, of course. We have thousands of stocks, right? You have macro, your penny stocks, and these are the pretty much the market capitalization based on the micro, small cap, mid, and large cap stocks. So if you want to be a penny stock trader, you already know what that is, or if you want to trade large caps, you already know what that is as well. So there are differences in each, and especially the movement and the way they move. But what we need to base any buy decision, technical analysis. So we'll go from here. And now we'll come to identifying candlesticks. And this is Kevin's expertise right here.
Hello, everyone. So we all know that I love candlesticks. I've been studying these for about a year. I think they are very, very important part of trading. Using candlesticks, you can't just use a candlestick. You have to use something else behind it, preferably support and resistance. That's very important. So with that said, so a candlestick basically is a price action, whether it's in a 1 minute time frame, 2 minute, 5, a half hour, a day. It doesn't matter. It's a price action of that time frame, whatever you've selected. So if you notice in the first image, you see a green and a red. Green is a bullish candle. Red is bearish. You do have an open and a close, and then on a bearish, you have a candle that opened higher and closed lower. You do have wicks. Wicks are basically a high and a low of that time frame of the candle. So if you look over to the right, you'll see the first candle, it's engulfing, right? So it's green, bullish, engulfing. A lot of people get this candle mistaken because they'll use prior to this engulfing candle, they'll use a smaller green candle and call it bullish engulfing. That's not generally the case. It's supposed to be, the previous day is supposed to be a smaller red candle that the next day is followed by a bigger green candle, which engulfs the candle. Okay. That is considered bullish engulfing. If it was bearish, it would be a small green candle and a large red candle. The next candle is a hammer or a hangman. Mm-hmm. Now, this is generally on a trend. So these are all basically on an uptrend or a downtrend. So a hammer candle is usually formed when you have several days of a downtrend, and then you get this next day candle, which was a body, and then you have a long wick. You do need confirmation the following day for this to play out, but it is a sign that if it's bearish, it's letting you know that the bulls are coming back into play. On a hangman, it's usually formed on an uptrend. So on an uptrend, you'd have several days of a green day, and then you get this hammer-like candle, but that's a hangman candle on the uptrend, which is letting people know that the stock is potentially going to reverse or pull back. The Harami candle forms once again on an uptrend or a downtrend. It is a reversal signal. It's the next candle will trade in the previous candle. So you have a previous candle would be red followed by a green candle. So it's just a reversal candle. The shooting star is one of my favorite candles. I do like the shooting star. You know, I do look for it a lot, and it'll form on the uptrend. You'll see several days of bullish movement, and then you'll get your shooting star, which is another sign of a reversal. So on the spinning top, the spinning top is indecision in the market. It's kind of like a doji. It's kind of a battle between bulls and bears. Usually, if you catch a spinning top at the top of an uptrend, it's a sign of a reversal. If it's on a downtrend, you do need confirmation the following day. And the same applies with the doji. If you have a doji at the top of an uptrend, it's indecision in the market, which, you know, it's potential that the market's going to reverse. And it's the same thing as a bearish trend. It's possible that the trend could be turning around. But once again, keep in mind, you do need confirmation the following day. I think the only candle on here would be the bullish engulfing, which is you don't need confirmation. That's the only one I think that you don't need confirmation. Yeah, you can go to the next slide, Latoya. Thank you. So the morning star pattern is really common in the market. I do look for it a lot. The morning star, it's a bullish reversal pattern. So it's the first candle is usually a long red candle, followed by a short candlestick that is gapped down, right? You can see here, thank you. You can see here that gap down, okay? The third candle is a long greenish candle that closes above the midpoint of the first candle. So that is your pattern. That's what you look for in a morning star. On the evening star, it's the same rules apply. So you have this big trend coming up 3 days, and then you get this gap up. It looks like a spinning top, and then the third day, it's followed by a gap down. That is your confirmation. The trend is turning. It's going bearish. It's time to get out, close your position, or you could short it, whatever your preference is. Now, if you look at the hammer, okay, you can see off to the left side, you have your bullish hammer. Notice the trend. Trend is coming down. You have the hammer candle, okay? So the wick is relatively long with a decent sized body. That's a hammer candle. And you need confirmation the next day, which is what we got in this image. A bearish hangman. Okay, so you have a trend going up. The trend goes up, and then you have what looks like a hammer candle. People call it a hammer all the time. It's not a hammer. It's a hangman. And that is a sign that the trend is coming down. We're going to go bearish. The inverted hammer, it's bullish. As you notice, you can see the trend. It goes down. We have a bearish trend. You know, we're looking for a reversal. Where's our reversal? Well, you have the inverted hammer, which comes out. You see the long wick that goes up. That's letting people know bulls are starting to come into play. Bulls are coming in here, but we still close relatively bearish. But it's a signal for us to know that the bulls are coming back into play. So we do need confirmation, and we did receive that the following day. The shooting star is actually a very good indicator for a trend change, a change in trend. It is bearish. I do look for this candle quite a bit in a long uptrend. You can see the trend goes up, and then you have this long wick. So basically that long wick it's kind of exhausted. It exhausted it. It ran out of gas basically. And so the bears come back and push that back. That's kind of your sign that the trend is going to reverse. So you would wait for confirmation. And as you can see, you did get confirmation the next day. Yeah, you can go to the next slide. Yeah. Okay, so this is a old chart, but we can use this as a example of candles and how to use them. So if you look at the first image that's circled, right down over, yeah, right there. You see that image? Okay, so this is basically like a evening star type pattern. So you have a red day, a gap down red day, and then it gaps up green, the third candle. So that's your morning star pattern. And you can notice how the trend starts going back up, and you get the idea. The next one looks like maybe you could call this a what do they call it? You could call it a evening doji star, because it has the doji in the middle. The second candle is a doji. So you could probably call that an evening doji style.
Yeah, you can call that a doji.
Yeah. Okay. Thank you. So it's the same concept. So it is bearish. It is letting people know that there is a trend change. Once again, remember, dojis and spinning tops are indecision in the market. So you had this long green run up, and then you had this doji. It's kind of like we don't know where we want to go with the price here. So it's indecision. It's kind of a indicator that the market's going to change. And then you got your confirmation on the third candle that closed bearish, and that confirms the trend to go. That's going to be bearish trend. The third one, I guess you could call that a hammer. You notice how it gaps down, has the long wick and the body. So I guess you could call that a hammer. And that, once again, we're waiting for confirmation the following day. We need confirmation. You can't just say, oh, okay, well, I have a hammer. I'm going to invest and buy and go long. You cannot do that. You will lose. So you want to be smart and wait for confirmation. So the following day, we had this massive gap up. So the gap up is confirmation to go long. This is a strong move. We need to go long. So you go long, playing with support and resistance. You have to play with that. So you notice it hit the 200 on the moving average and pulled back. So, take into consideration using, moving averages, support and resistance, so forth and so on. So if you go to the next one, we have an evening star, right? No, morning star, sorry. So you have a morning star candle setup. So you have your red, several red days. Then you have your doji right in the middle there. And you guess you could call that a doji. It looks like it. And then followed by a big green up. Mm-hmm. So that's a pattern. These are patterns that these are just buy and sell signals within the candlestick that people use. And I don't know every single pattern. There's what, 12, 15, 30 different types of candlestick patterns. I don't know them all yet. I'm still learning them. But it's really more about identifying.
Good.
If you can
Glad you said
identify the sediment of the candlestick and the pattern, you can get a general idea of where we're going. If you look at the next candle, the one that's highlighted, okay, that is more of, you could call that maybe like it looks like a long-legged spinning top. I mean, it's got a long wick going up. It's kind of like the bulls came out and tried to go higher, but the bears just wouldn't let it go. It's kind of a bearish sediment for me. So, I mean, it's like I said, it's all identifying and just trying to get a feel for everything. If you look at the next one that's highlighted right here, that is a hammer on an uptrend, right? So we have an uptrend that goes up. Okay, we have this trend that goes up, and then we have a hangman. Okay, so you have your hangman candle. That is a sell signal. That is the trend's coming down. That's a signal, sell signal for a lot of people, and it's also a short signal for a lot of shorts if you wanted to short. Let's see. How do I? Okay, so over here is another one. This is another morning star setup. Once again, you see the 3 red candles. You got and then you have your doji, so maybe an evening doji star, and then followed once again with confirmation, followed by a bullish green day that closed, above the first day's candle or midway first day candle, and so forth and so on. Okay, so this is a very popular penny stock. I actually asked to have this put in. This was something that I called to short back at this point here. Where is it? How do I? Yeah, right there. Okay, so this is a perfect example of an evening star, right? Yeah, an evening star. Okay, so I called this the short, and people asked, how did I know? And it's because I've studied candles. So if you notice here, right, this candle, we have this big run up right here, and then it gaps up, and then we form this doji spinning top type candle. That is a red flag for me, because it's bulls tried to go higher, bears said no. I mean, it was just a big tug of war. It's on an uptrend. You notice the uptrend, and then it's a doji or a spinning top. It's a sign of indecision. And for me, if I'm going long and I see this, I'm taking my profits and I'm leaving. And if you notice, the third day, we have this long red candle right there, short, and for longs to get out and just let this take its course. But I asked this particular chart for this particular pattern because this is popular. Everyone's playing the stock. I mean, everyone knows about it. So that's why I wanted this particular chart in here. I mean, you can see other type of signals too as well. I mean, if you notice the trend here, right? We have a downtrend, right? And what do we have right here? We have an inverted hammer. What are we waiting for the next day? Confirmation. Well, we got confirmation. It went up. But the problem is it didn't go anywhere. It hit up and then came back down. So what happened? It probably hit resistance, and that was it. If you notice, let's see. If you notice this here, we have a nice little trend upwards, right? So where do we take profits? Well, I mean, where's our sell signal? What do we have right there? Once again, another shooting star type. That's a sell signal. Take your profits and get out. And let's see. Let me do one more. See if I can find one. Okay, so let's look at this one here. So you notice the downtrend, right? So we have a downtrend, a gap down downtrend. And then we have this spinning top. Okay, that's indecision. But the following day was a green candle. The next day was another green candle, and then a gap up. So I mean, you would have probably been in it here, and then at that gap up, that red gap up, you would have probably taken your profits. But I mean, candles are fun if you understand them. I'm still learning, still learning as I go. The biggest thing with candles is identifying, and that is you can make some serious mistakes identifying candles. But if you can get the sentiment of the chart, the trend, you'll be fine. But it takes time. Like I said, I'm still learning, so it just takes time. But with study and practice and hard work, you can figure it out.
Very true, very true. So, how to interpret a stock chart? What is it telling you, basically? Looking at this chart probably looks like a bunch of noise. However, just looking at a quick glance of this one, you can see that current price action, if we look towards April, this is currently in a channel. In the next slides, we'll go through the channels, the uptrends, as well as the downtrends. So if we look at a chart of Lulu, this chart is based on a weekly. So just know each candlestick is basically a week. So there's 5 trading days in a week. So if we look at the first example of the uptrend, and it's on a weekly, as Kevin explained, the bullish candlesticks between bullish and bearish, you can see the trend of all the bullish candlesticks one after another. That's your solid uptrend. And then you also see the downtrend towards the right. So we use a lot of trend lines to get the trend, basically, so you can get in on the right side of the trade. And this is a weekly chart example. So we'll go to the next. And here is a channel. So channels, basically you're hitting a bottom of a support level. And then when one comes to the top, that's the top of a resistant level. So within channels, you do not want to enter in within a channel, because generally what happens is the price action or the range of the channel is normally so wide that many will not be able to stomach that price action being whipped back and forth within a channel. You always need a break either above or below the channel. Now, to give you an example, because I know someone asked a question more so about your entry as well as your stop. So we can use this example as if we were to buy DLTR based on the break above the channel. So you will enter on the break above the channel. In this example, your stop loss will be the bottom of the channel. That's it. So that's more of a technical way of trading once you get a breakout out of the channel. And you can see from here, it proceeded up a few days. Now, as well as using your candlestick analysis, you can see the different top and tail bearish before it starts to proceed, and you get nothing but selling pressure afterwards. So once again, that's where candlestick analysis comes in and helps with analyzing a chart as well as your support and resistance levels. So we'll move on to the next slide. And this goes back to support and resistance. Just outline more so your support, bottom of the channel, your resistance, top of the channel, and how price action is back and forth within the channels before either a break out or a break below the channel. So you can see in this example, we have numerous breaks above, then we have a break below those support and resistance lines that were formed within the channel. We'll move on to the next. So here we go with risk and money management.
So we look at the aspect of trading. We know we learned about a lot of the stock charts, as well as we learned about candlestick analysis. Now, one of the things a lot of new traders fail to realize, when you start trading, in order to stay in this game, is to have the right risk money management. You need to have risk money management in order to stay in here, because even though you look at it, it's more psychology than anything. Like Latoya mentioned earlier about having a trading plan, deciding what you're going to do. You have to look at that. So you can have all the skills in the world, but if you're not taking profits, if you don't have the right risk money management, you're not going to be able to stomach or be in this trade, period. You can't stay in this business. And I think a lot of people think it's that easy to actually trade, and it's not really going to happen. It's not really going to happen. So, for example, you got to ask yourself, what's a good ratio, a risk to reward? So when you look at this little diagram here, every time you get in a trade, you need to know where you're going. You get in your car every single day, you have a direction, right? You just don't drive everywhere, how far down the road I'm going to go. No, you have a destination, and that's what you want to do. That's exactly what you want to do. You want to have a destination every time you get into a trade. And you also want to have a stop loss. Now, many people, there's pros and cons. They always feel, oh, I don't use stop losses because it's going to take me out of a trade prematurely. Like Kevin mentioned earlier, if you identify the candlestick patterns, the reversal signs, there's no reason for you to be in that trade if that candlestick violates. So that reversal patterns he shows, the evening stars, the morning stars, if those violate, the trade is over. It may come back in your favor, right? But hey, that's the name of the game. That's why you're trading with probabilities. There's nothing accurate for sure. So I'll give you this little small example. Say you buy a stock, right? Just buy 100 shares of a $10 stock, right? This is where people realize you're not losing a whole lot of money. The stock goes down to $9.50, you get stopped out, right? You lose $50. So even if you got a small account, say you got a small account with $5,000, you're not killing yourself. But what's the reward of this? If it goes up to your 3-to-1 ratio, you made $150. Now, this is the beauty behind trading, which you have to have a trading plan. You do about 3 of these trades a week. All you need is just one trade, right? You need one trade in a risk-reward ratio, and you'll still book profits, right? You still book profits. But if 3 of those trades all go bad, you lost $150. So ask yourself another question. What's the likelihood that all 3 of your trades will result into a loss? Now that depends on your education, the information you know, and how you enter in and exit in a trade. And this is what people do every single day. People do every single day that have a right trading plan. So a lot of questions you need to ask yourself as an individual, right? As an individual trader, what is my share size? Now, any instructor, any educational book, video is not going to tell you that. You get what I'm saying? The saying is, what you eat won't make me fat, right? What you lose on is not going to make me broke. In the trading market, you have to have your best interests at heart. Just like Latoya mentioned earlier and Kevin, it's all fun and games when people are making profits in these Facebook groups and things like that. You post a loss, what happens? They move on to the next winning trade. Nobody cares how much money you lose. It's you versus the market. So you need to determine your own risk money management. So you have to start with your share size. Another question, how much am I willing to lose per trade? Gave you a example, right? $50 I'm willing to lose per trade because I want to make 150. That's just a simple example that you can possibly use. Do I have a stop loss and a target? Right? Very important. Everybody says, oh, I'm cutting it off too soon. I could have made $300 or $400 more. Yes, you can, but everybody doesn't think about what you could have lost. But many people fail at trading because they never build consistency, right? And consistency builds confidence. So maybe you're at a point in your life in trading as a newbie where you can't have that trade run 2 or 3 or 4 points. Maybe you need to book the profits so you feel more comfortable, and maybe you can increase your share size, right? Another question, is it a short-term or long-term trade? As day traders, as we trade every single day, Latoya and I, we know that we're in and out of the market fast. Average trade maybe like, I don't know, sometimes 5-6 minutes or so or whatever. Some people may be getting in the trade, say they're only going to hold this overnight, then it turns into a long-term trade. You can't change your decision once you get in that trade. Whether it's a swing trade, whether it's a day trade, you need to know. And so that's where the balance comes in of risk to reward. You always need to know your own personal risk to reward. I can't stress it enough, is you versus the market. Another misconception with trading is the devaluing of money. Listen, many of us will drive an extra 2 miles to save 5 cents on gas, right? But you won't take $20 or $30 profit. That's how you got to look at the market. When you start trading, people devalue money. You won't throw $20 or $30 out the window. But in the stock market, people will give $100 back. $50, $60 back. That's one of the major things with trading. You can't look at the monetary value of it. You need to look at it as profits. If you're booking profits, you're making money. Now, this is something somebody mentioned earlier about the difference between large, mid, and small cap stocks. This is just a way you can look at it. So the risk probabilities and the negative return. So large caps may be low, mid caps high, small caps very high. It's just giving you a perimeter of how to look at it. Large caps low. A lot of big companies people invest in, right? So the risk may be a little bit low in that sense. The probability of exceptionally high returns. Large caps, they say low, but not necessarily if you know how to day trade and trade the price action. Small caps are very high because, like Kevin mentioned in that trade before, these penny stocks move fast. If you know how to trade them the right way, you can get a ridiculously high return. The key word, you know how to trade them the right way. Liquidity is very good. Some of these large caps, they move a lot, right? Because there's a lot of participants in there, a lot of hedge funds, a lot of retirement accounts. The small caps, depending on if it's a runner that day, a bio or a farm, some of them, if you look at the daily chart, they hardly even move unless there's big news. But that's why it's a high return when they do move, right? So this is something to take and consider. Company information availability. of course, very good for large and mid cap, poor small cap. So a lot of these small caps, they could be a lot of runners. A lot of these big name individuals may be holding a lot of stocks, a lot of shares. And one thing you need to remember, there's always somebody on the other side of that trade. So you hear somebody pumping and pumping, especially a penny stock, you could be their bag holder if they decide to let go. So that's why it's very important to have that risk side and that management side and book your profits accordingly. So remember that. That's very, very important. So at this point, we'd like to ask, I guess, Latoya to come back, and also Kevin. There's a chat pane here as well. If you put in to panelists, all attendees, any questions that you may have, we look forward to trying to answer them, and we can go from there. One thing why individuals are looking, might be typing in some questions to ask, is it's great that you guys have come to this, because getting educated is the first and foremost part of learning how to trade the markets, because you're dealing with money. So one of the questions here, do you typically day trade the same stocks? Well, one thing you can look at as a day trader, we look for price action, we look for movement, and we also look for, of course, earnings. So one question you may want to ask yourself, if a stock keeps paying you, why stop trading it? So you can stick with the same stock if you know the personality and you still make money with it. A lot of swing traders do that. They trade the same stock over and over again. There's nothing wrong with it if you know the personality and you keep the stock in your basket, what we like to call it. So we do have some favorite stocks we go to currently. Facebook and Apple and Baba have been very, very what we call wet and liquid. So if we're not trading any earnings or something else with price action, we'll usually jump to either one of those three and trade a range or scalp it or something like that. Any other questions? So scalping, Latoya, you want to explain what scalping is?
Sure. So, scalping. I actually want to use an example, but it will take me a while to bring it up. So, scalping is basically, so it's day trading. It's a form of day trading. So let's say you have a 1 minute chart up. So you're using 1 minute chart for scalping. And the concept of scalping is you really only want between 5 to 10 cent movement in a stock. Now, it depends on the stock, of course. So let's say if you're trading a penny stock, let's say the stock is like $1. Very poor example, but just a concept. You can't really scalp a penny stock because you got to think of the range, especially if it's not volatile. But if that penny stock is volatile, let's say it opened at $1 and it ran to $3, you have a $2 range. So the fluctuation, because of the volatility and the volume during that day, it is very possible to scalp a penny stock for 10 cents. So just do a simple math, 1,000 shares, and you're taking 10 cents, you're taking $100 every 10 cents at a time, getting in 1,000 shares. So that's the concept of scalping. You're really taking advantage of the very small price movement based on a 1 minute chart. So that's scalping.
So I know somebody asked a question. When we recorded this video, we'll put that link in the room and probably give some suggestions there as well with different reading material to assist you with the candlestick analysis with that. So as you review this webinar, you'll be able to grasp it and see it a lot for yourself. Only thing I could suggest as students of the market, especially are you going to be a technical trader, is always, if you're going to follow a couple of stocks, just learn them. Pinpoint out those reversal patterns like you saw Kevin going over on your own. If you're looking at a certain stock or a stock chart, keep a little library of yourself. So now it's easier for you to see it. In traders, we call it seat time. So as a seat time, you always want to make sure you're seeing what's going on as the market plays out.
So with I see the question here with in regards to paper trading Forex. So you're looking specifically at the EUR USD. So you find that the trends don't really much apply with certain peers in a Forex market. But I'll say one thing, the candlesticks are pretty much the same across the board. You're going to still get the same reversal patterns that play forth in the Forex market as you would get in the equities market. So yes, very important to learn your candlesticks as well as nailing down that support and resistance levels when looking at any chart. You should have more success once learning those reversal patterns and signals.
If if I can just give a tip real quick on something that I did in my back testing of candlesticks, was I would look, everyone knows I trade penny stocks. I love penny stocks. It's just my personality. But what I did to learn candlesticks was I would look at the previous stocks that ran up, 20, 30, 40, 500%, 600%. I would look at those stocks and I would look at the closing candle of that day. And I would see the following day what was the outcome, and I would study that type of a candle and try to understand if it was a bullish or bearish sentiment. And that's one thing that has helped me, become a better trader with candlesticks and momentum. You just try it. Don't take what I say and just go do it, but do a lot of back testing. Identifying candles is very important. It's very difficult. You could see, a hammer type candle mid-trend, and identifying that is going to be wrong. It takes time. It takes practice. And, most of all is to be very patient with the market. The market's not patient with you, so you have to be very patient with the market. It's, it could go against you. It could go for you. But, being patient and just understanding is very important.
I'm posting a little video here. This is one of our penny stock trades we have taken in the room. And it depends on the share size. Like when you're trading, like for example, we got in this trade here, you'll see, I forgot how many shares we got in an AKTX, right? This is a breakout pattern. And we post these on our YouTube channel, and you see how it moves. We saw the bottom and tail. So depending on the price of the stock, like you see something like here, I'll just pause this real quick. So that was quick. That was like over $1,000 in what was this? Less than a minute or something like that. Probably less than that. So it depends on the price of the stock as well, how we get in with our share size. So you have to treat it like that. It doesn't matter if it's 100 shares or 1,000 shares. You got to learn how to trade the same exact way. And that's all comes with confidence. This is another stock we have here. This is Lulu. We'll post a link in here. And you see how we're short in Lulu? We speed it up a little bit. This is the power of understanding it. We have a reversal sign. I'll try to slow it down for you a little bit. We start covering fast because we get into price action fast. This is high frequency day trading. So the red dots, of course, I just want to explain it to people, are shorting. Like Latoya mentioned earlier, you're making money as the stock goes down. And the green bars, the green bar dots are covering. So this is something just to show you how a stock, when somebody asks you, can you keep trading the stock? So we was able to short this stock and we made $746, right? I don't remember how many shares it was, but we got in the price action heavy. And this is all by identifying the candlesticks. Now, if you look further, we got into the trade again. We was able to reshort it again. So you can't see the commentary on this. We have this on the YouTube channel. Just something we found. I happen to find here. So we was able to reshort. It gave another entry, and we started exiting again for this. You see right here. I think we what was the P&L on this one? So we was able to get back in now with confidence with this trade, and we was able to make a little over $2,000 in this trade. So it's more of, as a trader, when you see the setup, when the candles talk to you, because it's another language. So that was the total P&L for that day. And like somebody mentioned, that's the same thing. We made $2,000 in Lulu. So now if you look back, you see the short here. We took it, covered, shorted. Now it started trending down. But this is high frequency trading. So it doesn't change when you're doing the same thing with swing trading. So what program do you, okay. Let me pause this for a second. We all trade off a light speed trader. We do light speed trader. That's who we trade off of. And the webinar will be recorded, correct. So I'll let Latoya answer any questions too if she sees fit. But I'm gonna play this here as well. So one thing Latoya mentioned before is about shorting the market, and this is a little more advanced. So news came out, and this is the knowledge that you'll pick up when you become a little bit more advanced and understanding the market. You know, AAL is an airline stock that had news, as well as UAL. You know, UAL is another airline stock. So throughout the mornings, you hear these news take place, and that sector starts to fall. As an advanced trader, you're able to capitalize and get in both stocks at the same time. Now, as you see, this does take advanced trading, because we start to short both stocks. Say 45 cents we made on that stock, right? It eventually went to 80 cents. But like Latoya mentioned before, it's all about the share size. So as you advance as a trader, you want to be able to feel comfortable adding to the position or increasing your share size. So these two trades, UAL, we got $424. AAL, we got $917. So that's how you can look at it as well.
So one thing I also want to add, right? Because there are different markets, right? So you have your forex, your futures, your equities market. And basically you know the candlesticks, because we trade off the candlesticks. We see what they're telling us and we react based on what the candlestick says in order to take a trade. So there's also a mix of support and resistance levels. For example, like you'll have a resistance. You don't buy into resistance, right? Obviously, because it's resistance. Same thing with shorting. You do not short into support. So very basic concepts like that will help you determine which direction you're going to take the trade as well. So just like penny stocks, mid caps, large caps, right? We trade them all, but we specifically trade mid to large caps. And there's a very good reason for that. We find more consistency, if that makes sense, in trading mid to large caps. But in order to day trade them, you need the capital, of course, right? Like with penny stocks, it's beneficial to trade them if you're growing a small account, right? Everyone wants to grow a small account into a large account one day so they can trade the large caps. And there's a very good rationale for that. But some people, they love penny stocks so much, they stick to that, which is no problem. But I just want to say there's other methods to grow a small account other than trading penny stocks, because not everyone is good at trading penny stocks. You either get the flush at open, right? Let's say the penny stock gaps up. Sometimes you get that initial flush. And if you have a broker that do not have shares, you're not going to benefit from shorting it because you can't get the borrows. That's the thing. There's a strategy to the madness, right? Everyone loves shorting the pumps, but most brokers do not have the borrows. Very limited borrows exist for that particular strategy. So back to growing the small accounts, there's other avenues. There's the futures market. Many don't even know that there that market requires less capital to grow a small account. It's the same concept. You know your candlesticks, you know your support and resistance. You can grow a small account based off of simple $1,500 trading futures, future contracts. There's different ones. You can also grow a small account based off of option trading as well. And of course, the Forex market, everyone loves the leverage. You can grow a small account trading the Forex market as well. But the key concept in any of these markets is your risk management. That determines your success. Are you disciplined enough to cut your losses? Or are you stubborn just to add to the position, just to prove yourself right? So that really determines what type of trader you are. Now, swing traders, you have more time, right? So just remember that the difference between day trading and swing trading, any markets, it all has to do with the time frame you're trading. So new traders focus on a longer term picture, like let's say 1 week to 2 weeks or even 3 days with a price target, rather than trying to day trade, because that's definitely more advanced and not really understanding how those time frames connect. A lot of people lose money. So hopefully we answered your questions. If you have any more questions, we'll answer them. Let's see, did I answer that? So for the futures, yes, it's strictly just alerts. Sometimes they post the analysis ahead as with the charts for the futures alerts. All right, so I've heard many times because of emotions, a person in the stock market will lose more when they're wrong and win less when they're right. Can you explain a good strategy for how a new trader can get past this obstacle? What would you say about that, Ernest? I have different thoughts.
Well, I think it's all the mindset. Definitely the mindset of how. Trying to read that question again. Yeah, emotions of her. The thing
So
is,
like in a trade, you know how you add to a position and let's say it goes against you, add more and you're losing more, right? But when the trade goes in your favor, you cut the lot, well, you cut your winners short, basically. I believe that's what they're explaining.
it's to a point where you should try to be. We like to say control the emotion and trade the plan. That's the best way I could possibly put it. Control the emotion and trade the plan, because you'll be at one point, right? You'll be at one point where you see the money going against you and you want to cut the loss. But at the same time, you got to learn how to have that trading plan in place, because if it goes against you, it goes against you, right? Then you have the stop loss. So either way you look at it, you want to be almost numb on both ends. So we get excited, of course, we get real excited when we are making money and the trade goes in our favor. But we got to learn how to, at the same time, when a trade does go in your favor and goes against you, almost have the same type of feeling, like it's just a job. It's just a plain job. You're getting in and out of the trade, and try to keep it numb like that.
So hopefully that helps. So just keep in mind, just remember. So I know a lot of you try to day trade. So if you do try to day trade, just remember, do not hold on to a losing position. So if it initially goes against your analysis, just get out. So if anything you should take away from this webinar, just make sure you take away you need a plan. When you enter a stock, you need an entry price. You need a stop loss ahead of time where you do not want to see it below, meaning your risk. So if you only want to risk, let's say $50 to $100, your stop loss should reflect that. And you also should have a targeted price in mind when you entering in the trade. It keeps you safe and definitely out of trouble. So we're going to give you one more example of how you can grow a small account, but we're going to use a futures trade example because someone asked about the futures market. So all of our trades are based off of candlesticks. So with this one, you'll see the, I forgot what they call this, the DOM, D-O-M. So basically you're going to see the buy orders, the bid and the ask. You will see when that trade's being entered, and you're going to look at, you see towards the left, that's the chart. You see support, resistant levels, and most importantly is just a candlestick chart.
Now in this trade, we trade the oil report sometimes, right? And this is where it gets very advanced as a trader. And this is what somebody mentioned before about how the money can go against you, but if you believe in the trade, you're going to take the trade. So watch how this trade plays out and how you have to believe in it. So we shorted 2 contracts of oil. This is CL, right? And it starts to play out, and you'll see how negative you can go with oil when you trade the report versus regular day trading. And that's why it takes skill knowing an anticipated target. Now in futures, you can lose a lot of money, you can make a lot of money, but you really have to really know what you're doing. Very affordable versus the stocks. And one thing about futures is, which is great as well, is that you're only looking at a couple of charts. So many people look at this, you see how we're changing the different time frames and looking at how it plays out. So we always down $300. But we know how the oil report plays out, right? When you're trading the oil report, it's very volatile, and your own risk management, you would know. Usually in futures, you can get a 1-1 or 1-2, depending on the actual report in general. Not that another trade, just the actual report. You see the volatility is heavy. And we'll just watch how this thing plays out. That's why it's very important to know the support and resistance levels and where this can go. But if you're trading stocks, stick with the stocks. I know one gentleman said he's doing Forex, stick with the Forex. Or if you're doing futures, stick with one thing. Master one thing, then go to the next. You don't want to be all over the place. Like Latoya mentioned, we've been doing this for over 10 years, and we trade based off of technicals. So when we trade off of technicals, we trade any type of market. But any type of market you do trade, you have to feel comfortable and understand the market that you trade. So trading the futures market, we understand that. Knowing your forex pair, like a gentleman said, he was trading EU. Stick with that. Learn it. Learn the patterns. Don't go all over the place, and don't feel like you're missing out on something else. So, as you look at this trade right here, it still is playing out. We had 330 bucks at one point, but you got to be fast. You got to be very, very fast. And we closed out the trade. Still didn't close it out yet. See how we're trying to get out market. If you look at the top, a more advanced technique, we started closing out contracts little by little. 330 bucks. We was able to get on this trade, and that was just basically it. That's just something just to show you how sometimes the market will go against you, but at the same time, you really got to know what you're doing in order to be in this market.
If I can just say something, a lot of people know I do penny stocks. They're very, very risky trades. Don't marry penny stocks. They're day trades, possibly swing trades. Look for maybe some kind of upcoming catalyst if you want to swing it. But if you have no reason to be in that penny stock, get out, because it'll go against you really fast. I know someone who fell in love with a penny stock and has lost an substantial amount of money. If you're down in a penny stock, cut your losses fast. These penny stocks, they're not good. If you don't know how to trade them, don't trade them. They're risky, they're dangerous, and they move quick. So if you don't understand what's going on, please don't trade them, because they're just too risky. And, if you want to know about penny stocks, yeah, sure, I can help you, but I highly advise you understand the chart in the stock market before you even think about doing something like that. They're all pump and dumps. All of them.
All right. Thanks a lot, man. Appreciate that, Kevin. So, like we said, we're going to wrap this up right now. We hope you guys have the rest of the great afternoon. You said once we render down this video, Kevin, Latoya, that link will go into the room there. So everybody who didn't get a chance to see it will be able to see it as well. And any questions that you may have, you can also contact Kevin, Latoya, or myself, and we'll try to assist you the best way possible. So you guys have a great Saturday, and we'll talk to you soon.